Let's take a look at Treasury yields this morning. As we mentioned, they're a little lower, with the 10-year sitting at 4.58, the 2 years at 3.99. You've also got precious metals that have been climbing. You know about gold. We've been watching that for a while. It's up significantly this year. Silver at this point is at its highest level since February of 2012. Our next guest says that gold and other precious metals have been warning investors of what he calls a creeping financial repression and that a bond market panic could be looming. Joining us right now to explain all of this is Larry McDonald. He is the founder of the Bear Traps Report. He's also the author of the new book, How to Listen When Markets Speak. And Larry, thanks for coming in this morning.
Thank you, Becky. Thank you, Joe.
So Jamie Dimon was speaking in the last week or so, maybe 2 weeks ago, and saying that we could be facing a bond market revolt that could come in 6 months. It could come in 6 years. He doesn't know, but he knows what he's seeing on the fiscal side of things does not add up to nirvana for the bond markets. Why do you think it's sooner? Well, rather than later?
So what we try to do at the Bear Traps Report is measure the life of a narrative. So we talk to all our institutional clients around the world and kind of triangulate the information. And if you look at it, so right now the debt ceiling, we're stuck. So for every bond that comes due, one matures, and there's no new net issuance. But from September 1st to maybe, let's say, February, we're looking at 1.5 trillion of new issuance, of new debt issuance. And it comes out to roughly, could be up to 600 billion more than last year. Now, to me, the market knows this. The smart money, we just hosted an ideas dinner last night. And when you talk to institutional investors, they know this. And that's why Besant, our Treasury Secretary, is out there with some stealth moves toward kind of really supporting the bond market later in the year. But those moves are really kind of financial repression-like, which we can get into.
Well, what moves is Besant making?
Like the SLR expansion, you've got then the whole thing with Wells Fargo.
SLR, which allows the banks to potentially buy more and spend more of their capital.
So it's almost like
treasuries, he's hoping.
Exactly. It's almost like QE. So we calculate that SLR expansion could be up to 250 billion of new buyers. So they're using the bank balance sheets almost like the Fed, right? The banks are going to be supporting the market. The question is, how fast does that 250 billion come in? Is it this year or next year or the year after? And that depends on the Bowman situation with the Fed, and then that debate between the regulator at the Fed, Bowman, and then Powell himself.
We know that yields have backed up a little bit, but then we also see good economic data, and that brings yields back down. You know, where inflation is not running higher, the economy's doing pretty well. What's to say that isn't the stronger part of this hand?
Yeah, that's true. Yeah, we've had a nice move down in like 3 CPI reports. Now, the probability that one of the next 2 CPI reports actually has some of the tariff pain in it, in other words, toward higher prices, I think is pretty high.
The first one coming this week.
Yeah. So so we're in a little bit of a complacent zone on inflation, which we think about the last 3 years, we've been there a couple times, right? We've gone from like inflation fears to kind of inflation complacency back and forth. So I think we're priced in. Yeah.
If the bill gets passed, if the economy continues to do well, if there is growth that's stronger, as a lot of the Republicans supporting this bill have suggested, then what?
Well, the biggest thing is that Musk-Trump fight, and Musk outed kind of the fiscal largesse in the bill. If that bill, this is really fascinating for our viewers, if that bill gets delayed a month or so, then what's called the Treasury general account gets drained more. In other words, that's the money in Treasury, extraordinary measures. And the reason why that's important for our viewers is that if that bill gets delayed and they can't merge the 2 bills by, say,
between the House and the Senate,
say it goes out another month, then all of a sudden you're burning through your extraordinary measures. That means the refill of that bill in the 3rd, 4th quarter is going to be a lot bigger, a lot more pressure on the bond market. That's what silver and platinum and palladium and Bitcoin, to us, what we talk about in the book, How to Listen When Markets Speak, we think $4 to $6 trillion is going to move from financial assets, which are just paper certificates, right? Stock certificates, bonds, over to hard assets.
Commodities,
a new
precious
portfolio.
Metals and other commodities.
Right.
And that's what you would advise people to do right now ahead of this?
Yeah, I mean, we think, the old 60-40 portfolio should maybe be 30-30, 30 and 10. In other words, a much larger component of commodities.
30% commodities, 10% cash, is that what you're
10% cash, 30% bonds, 30% stocks.
What are the signs that we should watch to say that, okay, this move is afoot, aside from the moves that we've seen in silver and gold?
Agricultural names are dramatically outperforming. And typically they're second, third tier players. We saw this in the 2022 commodity bull market, so if you look at Mosaic and some of these ag players, now some people say, oh, that's the China trade deal getting priced into soybeans. But yeah, you want to look for the commodity market broadening out. And look at BCOM, Bloomberg Commodity Index versus the S&P, or NASDAQ, and look for those ratios.